And we are live. Welcome back, everyone. As you can see, today we're going to be talking about the top 3 stocks and ETFs in beauty and healthcare. If this sounds familiar, you're right. We did this on Saturday and we're running it back because the audio wasn't that great. So let's bring in our friends over here at TikTok and Instagram. And this time I'm going to keep the mic very close. The audio wasn't that great, so we're doing another replay. So if you heard it before, you should be able to participate with me in the comments, answer those questions. And if this is new for you, welcome. I'm Dr. Kimberly Madison, a doctorally prepared nurse practitioner, and I'm here to talk to you about how you can make money in the stock market without taking another class or getting another degree. So last week, I was here all last week talking to you about the cash flow quadrant. And so we talked about the difference between being an employee, self-employed, and a business owner. And then by the end of the week, we started talking about what it means to be an investor. That's what we're going to do tonight too. So last week, we covered the 4 quadrants of the cash flow quadrant, which is a book written by Robert Kiyosaki, the author of Rich Dad, Poor Dad. But I love this book more. And in fact, he talks so much about Rich Dad, Poor Dad in that book that I think if you start here, you'll get the best of both worlds. He covers employee and self-employed on one side of the quadrant. They only make money when they show up. And then the other side, talked about business owners and investors. We're the kind of people who make money in our sleep. That's where you want to be. And then the most important thing we talked about was the total addressable market in cosmetics, or TAM, because a lot of times the first thing you're going to hear as soon as you express an interest is that it's saturated and competitive. And right now, the way you look at anything, but in particular in cosmetics, because that's what we're talking about, you're looking at a small sliver of the pie. So if everyone's trying to get the same sliver of the pie, yeah, it will be saturated and very competitive, but there's a much bigger pie out there. And so if you're able to step back and take a bigger look at the landscape, you can certainly get your slice of the pie. You don't have to worry about competition or saturated market. After that, we talked about your 6 foundational accounts that you need. This is where you put your money. We talked about Aaliyah. She had 1 checking account for everything, and we fixed that. Then we moved into the 6 advanced accounts. This is how to make your money grow. We talked about Roth IRAs, brokerage accounts, health savings accounts. Maya opened her brokerage account and started investing $100 every 2 weeks. You can do the same thing. We covered dollar cost averaging. This is a strategy that removes emotion and timing anxiety. A lot of people are like, I don't know where to get started. I don't know how much to put in. I'm afraid about the market dropping. Dollar cost averaging is your strategy. You don't need to time the market because you can't time the market. The advice is to have time in the market. You just need to show up consistently, just like we want you to show up for your business. We covered the scarcity gap. We talked about Marcus, who was a nurse practitioner with over 30 years of experience, but he really didn't have enough savings, especially since he was looking at retirement within the next 7 to 10 years. In our workshop, he finally started investing $1,000 a month at age 58. And we showed you that it's not too late, because it's never too late. And if you missed any of those, you're in luck, because you can go back and catch the replay on LinkedIn and YouTube. I wish I knew how to save the replay here on Instagram and TikTok. I've done Instagram before, but I can't figure it out. If you want to help me, send me an email and let me know. And tonight, we're going to do this replay because most nurses think that investing is just putting money in our 401k. And we do want you to take advantage of your 401k and not just put money in there, but go into that account. You need to log into that account and determine where your money goes. And we're going to talk about some of the places you can designate your money, because the company tends to be a little bit more on the conservative side. And if you want to be a little bit more risky, big risk, big reward, then you want to determine where your money goes. And so a lot of times we just put our money in our 401k when we don't have that financial literacy, hoping that it will grow by the time we're 65. But, today we're going to talk about how to think like an investor in your own industry. Because I believe that as nurses, we can be investors and we're investable. Look, when you talk about building a business, people talk about, oh, but I need money. And so a lot of the conversation is around, well, I don't have enough money. I don't have good enough credit to get a loan, or I try to get venture capital or a grant and nobody will give it to me. Stop begging people for their attention. Go to other people who already understand what you're trying to do. Other nurses. One thing people don't know is we have money, right? We might have $5,000, might have $50,000. We might have $500,000. And if you're a small business like me, I'm sure you would be happy to take any of those checks. And if we don't have the money, we know we can pick up some shifts really quickly and get it. So we're primarily positioned to be investors. And because we are masters in human behavior and communication, problem solving, doing a whole lot with very little, we're also primarily positioned to help other businesses start, grow, optimize, and retain their staff and be innovators and problem solvers. So that makes us highly investable. We need to stop waiting for venture capital and start investing in each other. But before we do that, we need to learn how to invest. And that's why you're here. And that's what we did all last week. Financial literacy, going to help you end the year and start the year feeling a lot more confident and with a lot more strategy and security, not only for you, but for the people in your life and for our profession. Let's make sure everyone's here. Everyone can hear and see me. If you're here, put a $sign in the chat. And every time I say something that has to do with money, let me see some hearts. TikTok. TikTok is the best. Look, YouTube, LinkedIn, Instagram. If you want to beat TikTok, then let me see all your likes. Why are we talking about financial literacy? Well, inside the Alliance of Cosmetic Nurse Practitioners, we're not just teaching you how to inject, we're teaching you how to build wealth. We're the only professional membership founded on the 9 pillars of advanced practice nursing. One of those pillars is patient care. You all know that, okay? If you talk about slivers of the pie and what you need to know in your knowledge base, patient care is one sliver. And sometimes that's where we stop. That's that school that you went to, that some people call it nursing school. It's really patient care school. And you all know that. Because when you show up for work, there's all these other things that show up and that you feel like you need to know, and you feel like you didn't know anything and that you're starting over. It's because nursing school only addresses one piece. And look, that's all they need to address. We're always talking about we need to make nursing school different and improve it. Hey, if you're an entrepreneur, don't give them more of the secrets. Build it yourself. If you think about nursing school, your parents, your partner, we can only do so much. Not everything and everyone is meant to do all the things or be all the things for you. Nursing school does what nursing school does best. And outside of that, you need to make these investments in these other areas: personal well-being, professional development, financial literacy, research, policy, media. It's very important that we're telling our own stories. Technology can help us do it, and business. Because we know nursing school ignores skin of color. You all know that. Most dermatology nursing education ignores entrepreneurship, and cosmetic training doesn't understand or even include advanced nursing practice. And that's why the Alliance exists, because every day you're showing up with all 3 hats and you don't have time to go piecemealing everything together. And so we're there to provide that ongoing mentorship and coaching where your on-demand weekend course or academic program leaves off. Because what do we know? Your first question is never your last question, TikTok. So where do you go when you have another question? And we're there to provide that ongoing mentorship and coaching, because entrepreneurship can be lonely. It can be very overwhelming, and we can walk right into burnout from a place that we already left if we don't put new practices in place. And I know for a fact that community and accountability can allow you to do so much more, so much faster, and still enjoy the work that you're doing. And so we're there to do that. We provide that didactic training in nursing. We have didactic training. That's your coursework, your theory, and then your application is what you do in clinical practice. So if you've already gone and done your Botox or filler, you want to continue that education, or this is your first stop. This way, when you show up and someone's there to teach you and train you, you can use that time so much more efficiently when you're not depending on them to teach you everything you need to know. I'm telling you, that's not a good use of your time together. And really, your pace of learning is a reflection of your discipline and dedication at home. That's didactic training in nursing. So tonight we're going to give you a concrete plan. I told you we're going to cover the top 3 stocks and ETFs in the beauty and healthcare industry. And you can literally start with $100. Depending on the account, you might even be able to start with less than that. The key when it comes to investing in business is to get started. Figure out the fastest action you can take and take that action. If you don't remember anything tonight, it's to take action. So all the time we're talking about buying stocks, buying shares. Let's talk about what a share is. If you hear me say anything close to money, I either want to see a heart or I want to see a $sign in the comments. We want to welcome Instagram, TikTok, YouTube, and LinkedIn. TikTok has the best engagement. LinkedIn has the best conversation. It's the best place for networking. So let's talk about a share. So think of a share as a digital certification of ownership. This is proof that you have ownership. Now, when you think about a company like Eli Lilly or Ulta, they want to grow. So let's say they want to build a new factory, research a new drug, or open 500 new stores. They have two choices. They can borrow money from a bank and take on debt just like you would, or they can sell pieces of the company to the public. Those pieces are called shares or stocks. When you buy a share, you're not just gambling on a ticker symbol. Ticker are the three letters or the abbreviation that you'll see running at the bottom of a screen of any show that's really going over the stock market. That's the ticker symbol. You're buying a legal claim to a fraction of that company's assets and future earnings. Now, let me just pop over here. Can you guys hear me? Okay, great. So you own a tiny sliver of their real estate, you own a tiny sliver of their intellectual property, and you own a tiny sliver of the profit that they generate from every patient who walks through the door. Now, there's two ways you can make money when you have a share. Growth, which means appreciation. The company becomes more valuable over time, so your slice is worth more. Let's say it's like buying the worst house in the best neighborhood. You know, over time, the value of that home is just going to go up. Or dividends. This is profit sharing. This is the company thanking you for holding the stock because you're giving them the money they need to operate. They have so much cash that they send you a check just for holding that stock. Now, buying a share is the difference between being a consumer, giving them all your money, and an owner who gets paid when they win. Everybody wins. Now, before I give you these picks, I want to take a bigger look at the landscape. We talk about this all the time on my YouTube channel, where I do a lot of business case studies under Kimberly Madison DMP. We talk about the information that they're giving us. So we're a consumer of the information because it's very valuable. But then we want to step back and talk about why they're doing it, how they're doing it, so that we can do it too. I never want you to look at someone else and think that you can't do what they're doing. We're literally all the same. It's just the decisions that we're making. That's what differentiates someone who's able to achieve their goals versus someone who's just hoping and waiting. So I went to Yahoo Finance to look up this information. That's a credible resource for you. You can also go to Investopedia, and I love the Wall Street Journal. You can start watching, what is that? Bloomberg. I love that channel. In the beginning, it's going to seem a little maybe complex, maybe even intimidating. But if you continue to sit in that room and continue to listen, it's going to start making sense. You're going to start to hear the same thing over and over, just like we hear in our clinical practice. Yeah, there's thousands of diagnoses, but every day we're answering the same questions over and over. And for the most part, the most common things happen commonly. So we're treating those same things over and over. It's the same thing as the stock market. So I went to Yahoo Finance and I looked at the healthcare sector. There's a bunch of different sectors. I looked at that one. This is the ecosystem that we work in every single day. Now, when you look at that list, I want you to understand one thing. Size matters, okay? We rank these companies by their market cap. That's what the company is worth to investors. That's you and me. Now, it's different from revenue, and that's how much cash they bring in, okay? Totally different. So let's talk about United Health. Some of you guys work for United Health. So they bring in the most cash because they collect premiums from everyone. Now, Eli Lilly is worth the most because investors believe they own the future of medicine. Well, what's the future of medicine? Metabolic diseases, obesity, high cholesterol, high blood pressure. So, they're already in the news because of all the medications that are being used to treat blood pressure. Well, I think they've already announced it, that now they have the pill. So the weight loss pill that everybody's been waiting for decades is finally here. So they're not going anywhere. And they haven't been going anywhere. Lilly has been a top stock for a very long time. So when I was a traveler in Indiana, and so they have their home is there, but they're building one in Virginia, my home that I grew up in, and they're building one here in Texas, the home that I reside in. So Lilly's not going anywhere. So let's break down who's actually making money off of your labor when you show up for work. Now, when we look at Lilly, they recently became the first healthcare company in the history to hit 1 trillion market cap. Now, why? Because it's not about insulin anymore. It's Mounjaro and Zepbound. And if you are an MP starting your own weight loss clinic, understand your position. You're the distributor, they're the supplier. You're doing the consults, managing the side effects, taking the phone calls, dealing with the prior authorizations. They're making trillions of dollars. And if you're thinking about how to position you and your business, this is an area that you can really sink your teeth into, as well as our older adults who are the fastest growing age segment. The demand right now is everyone wants to age at home. So anything you're doing that targets being in the home is a home run. Everything from lights to security to accessibility, and of course, all the medical care. So think broadly how you can offer value in that space. Transportation, communication, video. My parents live in another state. I love being able to drop in and take a look at them. Right now, Amazon is how a lot of us are doing it, or security cameras. But really think, next time you go to work, you're not just an employee, you're a student of the game. Really look at all the little problems that are around you. So if you're starting your own weight loss clinic, you understand your position. They're making money off of you. Now, the investor says, if I'm going to build a business selling their medication, I should probably own stock in the company. This is what I mean when I say that we're investors. You already understand the industry. You already know which companies are winning. You just haven't been taught how to invest in them. That's ending right now that you're here. Now, when we look at AbbVie, they own Allergan Aesthetics, Botox, Juvederm. Every time you buy a vial, you're paying their rent. You're sending their kid to a really nice school. Now, if you're a self-employed quadrant, like we talked about last week, AbbVie is your biggest expense. But if you're an investor, like you're going to be after this live, AbbVie is an asset that can pay you dividends. You see the difference? So you can be self-employed and an investor at the same time. A lot of us are going to be working for someone else and using that money to fund our dream. Totally, totally normal. Now, you can buy Botox from AbbVie for your practice and own stock in AbbVie. So you get paid when other clinics buy Botox too. You're going to be so much more welcoming to people who are trying to transition into the specialty. And that's how we build wealth on multiple levels. Now, we always have to be cautious. There's always caution. Anytime you receive information, just like our clients and our patients, we want to offer a balanced viewpoint. We're not here to tell people what to do. We're here to give them the most up-to-date information to support them in making an informed decision, and then to support the decision that they make. Right? I'm here as a nurse practitioner. I'm not here as your financial advisor. So when we look at device companies like InMode, which owns Morpheus 8, or other laser companies, a few years ago, they were flying high. But today they're struggling. High interest rates make it very hard for clinics to lease expensive lasers. So if you're a business owner, you might be tempted to buy that $150 laser because it's trendy. But an investor looks at that balance sheet and sees a company in trouble. This is why financial literacy can literally save you money. Don't sign a 5-year lease with a company that might not be solvent in 2 years. This is what I mean when I say most business training for cosmetics ignores advanced nursing practice. They might tell you to buy the laser, but they won't tell you to check the company's financials first. But you're going to do that from now on. Okay, and then in the Alliance, we teach you how to do both and why it's important. Now let's look at Ulta Beauty, everyone's favorite, right? They're crushing it. Let's talk about why Ulta's crushing it. Put money in the chat. Okay, because they understand the consumer better than we do. Ulta is a partner in the 15% pledge, which dedicates shelf space to Black-owned brands. And guess what? It's profitable. They are proving that equity is an asset class. When you serve diverse populations, like we talk about in dermatology, nursing education, and research, you win. The market rewards inclusivity because the market is diverse. This is why skin of color dermatology isn't just the right thing to do clinically. It's the smart thing to do financially, and it's the best thing to do for patient outcomes. Now, when you master skin of color, you expand your total addressable market. That's what we talked about last week. We talked about the TAM. You serve patients that other clients are afraid to touch and position yourself to capture revenue that other providers are leaving on the table. Again, I told you last week I attended that webinar, and the skin of color segment of the hour was that it's really hard to notice redness on skin of color and that it's more complicated to treat. And that was the end of the skin of color segment. Now, let's fulfill the promise that I told you at the start of this live. You might be looking at Eli Lilly trading at hundreds of dollars a share and thinking, I don't have $1,000 to buy it. Now, how much are shares? It's all going to vary based on the company, the market, and how much we value it. You might find one share, it might be for water, it might be $50, whereas another share, and I should have looked for Google, it might be $1,000. It might literally be $1,000. And then over the course of time, and as the market fluctuates, it might go up and down. It will go up and down. We know that over the course of 100 years, the market always goes up and down. It's a pattern, just like our patients. We know that certain times of the year, we're going to see more pancreatitis, more liver failure, more heart failure as throughout the calendar. It's the same way in the market. Now, this brings us to our most important concept for the new investor, fractional shares. Now, remember when we talked about those brokerage accounts last week? This is where this comes into play. So apps like Robinhood, which became very popular during the pandemic, Fidelity, which a lot of healthcare entities use for their 401k, Cash App. I personally love, who has great marketing, by the way. I love Webull. It allows you to buy a slice of the share. So yes, it might be $1,000, but you can still buy a little piece of that, even if you don't have $1,000. Now, over the course of time, you keep making deposits. Once you reach $1,000, whether that takes you 4 weeks or 4 months, once you finally get there, then you'll own a share. And so if you do have $100, you can put 33 in 3 different companies if you want to. You don't have to be rich to start. You just need to be in the game. Now, remember that scarcity trap, you waiting for the right time, waiting till you graduate, waiting till you get that job, waiting till your taxes come back, waiting till you get engaged, waiting till you get pregnant, waiting until you move, waiting until you get waiting till you get a job in cosmetics. You're waiting for the wrong time, because the wrong time never comes. Right now is the right time. You wait until you have enough money, that might never happen. And that's what scarcity thinking is, and also thinking there's not enough. That's what kept markets stuck for 30 years. We want you to use abundance thinking, or you can start with $100. You can start today. And learn as you go. Definitely, you're going to always be learning. You're always going to be learning with investing and with your business. And that's the thing that can keep you stuck in your business, thinking you have to know everything before you can start. Think about Amazon. You think how big that company is? Every time there's a new thing, do you think Jeff is really sitting down learning all the new things in the business? No, he trusts other people who are doing that. And so you do have to learn how to trust people. Before we move on, I do want to add, so when you get into the market, if you're new, people are going to tell you all the time, buy companies that you shop from already. Sometimes that's good advice if that's a really strong quality company. And then it's not, though, if that company's not doing well. It's just like social media. Someone might have 10,000 followers, but they're not making any money from them, And so you could think, oh, well, because everyone shops there or wears this or makes content there, the company must be doing well. That doesn't mean anything. You can look at where you work and you can say, oh, it looks like they're doing well because they're still here. But you can see staff's getting fired. They don't take as many admissions anymore. People are getting discharged quicker. They're buying cheaper supplies. So you already understand this concept. So you might be new to investing, but you're not coming in without any lived experience that you can relate to this. The other thing I want you to think about when you're investing and kind of stretching out your money thin, think of it like, let's say it's a company, they have 100 shares to give to the public. And let's say you're like, oh, I'm going to buy 1 share in this company and 1 share in that company. Out of those 100 shares, you only represent 1. Nobody knows you're there. Now, if you decide, okay, this is the company that I'm going to buy 30 shares. Now, out of 100, they probably know you exist. So now you have actually a little more power. So at first, the conversation around investing is about money in your pocket. But what the real value is having a voice, is having a seat at the table of that company. Okay, so if I were building a cosmetic NP portfolio today, portfolio is like a collection of wherever your money's going. These are the top 3 individual stocks that the current market says are something you should consider. So the growth play, Lilly. Now, you would invest here because investing here is betting that the demand for weight loss and metabolic health is not a fad. It's a future of medicine. I'm preaching to the choir. You already know this. You're already seeing this in your clinic. You learned this in nursing school. Patients have been asking for Manjaro, and they're asking about Zepbound. You know about the demand, and you know about the shortage. Now, the strategy, buy this for growth. You expect the price is going to go up over time, and only God knows how high up that's going to go. That's where one of our other 9 pillars, politics, comes in, right? Because as a company, that price can continue to go up and up and up because of the demand. But as a clinician whose practice is based on ethical principles, you understand that that's not ethical or just for the public. Okay, so the stock pick for your income play, AbbVie. They're the dividend king. They pay shares stakeholders cash just for owning the stock. Even if the company slows down, people still get their Botox. You know this is true. You've seen it. Even during the pandemic, people were still getting their Botox. Now, the strategy for this is you buy this for the income. It's a defensive play. It's stable. So let's talk about dividend. So think of this like rent. If you own rental property, your tenants pay every month just for living there. Even if you don't do anything for them, you're still going to get a check just because you own that asset. Now, a dividend is rent payments from a company. So companies like AbbVie and Johnson & Johnson, wonderful friends of nursing. If you're looking for a scholarship, go check out J&J, are profitable because they can't really invest all that cash back into the business. What a great problem to have. So every quarter, they take a portion of their profits, which is after they've paid for everything that they need to operate their business and they have extra, that's the profit, they send it directly to you, the shareholder. So if you own the stock, that hits your brokerage account automatically, even if you don't clock in, without seeing another patient, without looking at another chart, your money made you money. This is what it means to be on the other side of the quadrant. And this is why we call AbbVie a defensive play, because even if the stock price flattens out, they're still going to pay you rent 4 times a year just for holding the keys. Now, let's talk about the part that might make you a little bit uncomfortable as a nurse, but it will make you wealthy as an investor. So publicly traded companies like United Health and Eli Lilly have a legal obligation called the fiduciary duty. This means that the CEO doesn't work for the patients. And they don't work for you and me. They work for their shareholders. So remember earlier when I said, what if that company wants to grow and they go borrow money from the public? Well, the public are those of us who are investors. Well, they made a promise to us when they took our money that they were going to give it back and then some. So they have to hold their promise. Now, their number one legal job is to maximize the value of the stock. When you see United raise premiums, that is to benefit the shareholder. When you see hospitals cutting staff to save costs, that is to protect the shareholder's profit margin. When you see Lilly set the price of Mounjaro, that is to drive returns for the shareholders. Now, as my peers in medicine, you're going to tell me that company doesn't care about us. They don't care about the patient. That's not true. Or they say they just don't care. They do care. It's about how that compassion has to be divided. Just like your patients who say you don't care because you didn't call them back, because you didn't pick up that call bell, because you didn't give them what they want. You know you care. You didn't wake up because you didn't care. But you have to not only triage your patients based on a level of acuity, but you also have other things to consider in addition to the patient. Now, as a nurse, if you're in the employee quadrant, this might feel unfair. You might feel the squeeze when their costs are cut. Now, as a patient, as a consumer, it feels expensive because we end up paying higher premiums. But the investor looks at this and says, well, if the system is legally rigged, is set up to benefit the shareholder, well, I can hate the player or I can play the game. It means I need to be a shareholder. And when you buy the stock, you stop being a victim of the decisions and you start being a beneficiary of them. You move from the person paying the price to the person collecting the profit. That is the shift. That's how we move to build founders. If you are following along, I want to see some more money signs in the chat and some more hearts, TikTok. Now, let's look at Ulta Beauty. This is the culture play, right? Because it's not just about makeup, it's about strategy. Ulta is a leader because they embrace that 15% pledge. If you know 15% pledge, let me see that in the chat. Now, in 2020, Aurora James issued a challenge to retailers. She's the visionary from Canada and the creative director of luxury accessories brand Brother Bellies. If I'm saying that wrong, put a heart in the chat. Now, she launched that company in 2013 to preserve African design traditions and support global artisan communities through sustainable handmade products. And she said, hey, Black people make up 15% of the population. We should own 15% of your shelf space. This wasn't asking for charity. She was simply asking for economic equality and smart business. We've heard that speech for a very long time. Now, the strategy is that Ulta accepted the challenge, and they're aggressively stocking Black-owned brands and capturing the diverse consumer spend that other retailers ignore. Investing in Ulta is betting that equity is an asset class. When you reflect the population you serve, your profits go up. And this is what I mean by saying equity is profitable. Ulta figured this out, and you should too. Buy this because inclusivity wins and because the numbers back it up. Jay-Z said numbers don't lie. Now, what if you don't want to pick winners and losers? It's too much, right? You were hearing me talk about 3 over here. Someone else was talking about some other ones. It can be a little bit overwhelming. And we know when people get overwhelmed, they don't take action. And we want you to take action. Now, this is where your ETFs or your exchange traded funds come in. We love these. Now, an ETF is a basket. You buy the basket instead of buying just Ulta or just Sephora or just Starbucks or Nike. You buy a whole basket and you own a tiny piece of everything inside that basket. Now, remember last week we talked about Maya, who bought the S&P 500 index fund. That was an ETF. She wasn't just picking individual stocks, she was buying the whole market. And we talk about the S&P 500, those are the top companies at the moment. And the people watching over that are going to only keep in the top performing companies. So even if you don't keep an eye on it, and even if you don't know which companies they are and who's in charge, they will keep track of that for you. So let's talk about the top 3 ETFs right now. So the Own Everything Fund, XLV. This is the Healthcare Select Sector, SPDR or SPIDER. Let's break that down. Now, before you buy this, you want to understand the name, okay? When you see SPDR in finance as pronounced SPIDER, it stands for Standard & Poor's Depository Receipts. You don't need to memorize that. Here's a simple way to think about it. So think about SPIDER like Nike. Nike is a brand that makes many different types of shoes, running, basketball, lifestyle. SPIDER is the brand that makes different types of ETFs, healthcare, retail, tech. And just like Nike is the company behind the shoe, the company behind SPIDER is State Street Global Advisors. Why does this matter to you? You need to know who's holding your money. State Street is one of the big 3 asset managers in the world, managing nearly $4 trillion. They actually invented the ETF back in 1993. Because all this stuff is made up, friends. But you might know them for something else. State Street is also the company that placed the famous Fearless Girl statue on Wall Street, the ponytailed girl staring down at the charging bull. They did that to challenge companies to put more women on boards. Are we accepting those positions? Are we creating positions for one another? So when you buy SPIDER Fund, you're investing in a company that literally changed the face of Wall Street. Now, what about the select sector part? This means they took the S&P 500, all those top companies, the varsity team of the US economy, and they took out only healthcare companies, okay? So to get on the S&P 500, that company has to do 2 things. They have to be big, have a big market cap, and they have to be profitable. That means they have to be making money. Now, when you buy XLV, you are betting on the winning team. You own Lilly, United, Johnson & Johnson, and Pfizer. They're all in one basket. You're buying one basket. If one falls down, the others keep it up. It's a really nice balance. So the logic is that you own the entire healthcare sector. And so it's a really great way to manage your risk, which is what you're always doing in the market. There's always a risk. And the more you risk, sometimes the more you end up winning on the other side, not always promised. And so this is a way to also diversify your portfolio, and it's really smart investing. Let's look at the infrastructure fund, IHI. So this is iShares United States Medical Devices. Inside of this one, you're going to find Intuitive Surgical, Abbott, and Stryker. Now let's talk about Stryker. Some of you probably already know Stryker. You're very familiar with Stryker. Well, everyone else is buying sexy lasers that depreciate. Stryker is selling hospital beds, knee replacements, and surgical navigation tools. Hospitals cannot function without them. People might skip on microneedling in a recession, but they're not going to stop breaking their bones. They don't stop needing surgery. Investing in IHI means you own infrastructure of medicine, the boring stuff that we call recession-proof stocks, that even when we're in a recession or the market goes down, these activities still stay ongoing. This helps you avoid risk that might come with a laser company and focus on big equipment makers that hospitals need to function. Number 3, your consumer fund, XRT. This is a SPIDER S&P retail fund. Now, this tracks where people spend their money, including beauty retail. Ulta's in there, Sephora's parent company is in there. And so your assignment, remember when we talked last week about dollar cost averaging, you don't have to invest everything at once. You invest a little bit every 2 weeks, every month, consistently. So this is where you don't need the $10,000. You can start with $100. When we're done with this, If you haven't already, you're going to go pick a brokerage that you're comfortable with. There's an app and there's a website. If you don't know what we're talking about, go back and watch those replays on LinkedIn and YouTube under my name, Kimberly Madison, DMP. And you can start off by putting 50 in XLV. That was the safe basket. And you can put 50 in Eli Lilly. That was the growth engine using fractional shares because Lilly costs more than $50 a share. Now, in 2 weeks from now, if you're happy, if you're comfortable with that, it's tough out here. Even those of us in healthcare, people are still getting fired. Professors, nurses, you name it. People are getting fired. And so you have to think about where you are right now, whether you can do it every 2 weeks or once a month. Just pick some time frame and stick with it, right? And it's the same thing, just like we did last week with Marcus. 50 here, 50 there. Automate it and then put a reminder in your calendar to just keep an eye on it. Not to make emotional decisions, it's just to keep an eye on it and also to help you learn and see how the market grows and how things fluctuate. And with dollar cost averaging, remember, you're picking a number that you're okay with. Think about how much you spend on your nails or at Starbucks or at the gym or on any of these software, Netflix. Look at how much you're okay spending on something that is considered not a necessity, and say, okay, you know what? If I'm comfortable spending $450 on coffee a month, certainly I can spend $50 on my future. Okay. So if you made it this far, put a heart in the chat and congratulations, because you're no longer just a nurse practitioner. You're an investor. You own part of the cosmetics industry and part of the healthcare industry, one of the top 10 industries in the GDP, or the gross domestic product of the country. No application needed. You didn't need Botox. You didn't need permission. You didn't need an interview. You didn't need a mentor. You didn't have to take PTO. You literally can do this without permission, without wasting any more time. This is what we teach inside the Alliance of Cosmetic Nurse Practitioners. We're not just teaching you clinical skills, because you need more than clinical skills to function. And we need more than clinical skills to run businesses. Okay, we teach you those 9 pillars right inside the Alliance: patient care, personal well-being, professional development. Here, we're talking about financial literacy, research, policy. A huge topic right now is our professional title is up for grabs, right? And then media. We have to be in the position where we're telling our own stories. Technology makes all this possible a lot faster and without permission in business, which so many of us are getting into. So we're building a community of nurse practitioners who are clinically excellent and financially literate. And it's not just for us, it's for our whole family. I talked to you last week about dynastic wealth. Shout out to Dr. LaTanya White for that, whose PhD thesis was based on that concept. Now, if you want to go deeper, all week long, I'm inviting you to the Money Workshop for Cosmetic MPs, which is a little taste of a 6-week series that we're doing inside of the Alliance called Financial Intimacy for Founders. Because I can talk to you all about the importance of money and investing and all these different accounts, right? But if you don't understand your relationship with money, it's not going to mean anything. It's like understanding your relationship with dating. If you don't unpack what's going on there, you're just going to move on to another partner, another job, and continue to have the same experiences over and over. It's going to be the same thing with your money and with your business. You're going to price yourself out the market. You're going to think you need to continue to drop your prices because you're not worth it. And you're never going to reach your goals that way. So we revamped the whole thing, because after we started doing this live last week, we heard so much great feedback that we revamped the entire thing for you. So first of all, the link is in the description box, or depending on where you're watching this, if you can't click links, you can DM me and I'll send you the link to register. I'm going to be teaching this 3 times this week, because we know you only remember 30% of what you hear. So if you show up all 3 times, by the end of the week, you'll know everything that I'm talking about. Or in case your schedule's all over the place, hopefully one of these times work for you. Tomorrow, Tuesday, December 16th at 4 p.m. Central, Friday, December 19th at 12 p.m. Central, and Saturday, December 20th at 10 a.m. Central. DM me, I'll send you the link. As long as you register, you'll get access to the replay. But if you show up live, you'll get access to the money workbook for cosmetic MPs directly to your email. That includes all my notes from last week. So that's the 4 quadrants, the total addressable market, the 6 foundation accounts, the 6 wealth building accounts, how to dollar cost average, and of course, the stock picks for the top stocks and top ETFs that we just covered. In addition to that, because we know you're all here, you've all committed to being continuing education learners, I'll also list my top 5 books for financial literacy that you can add to your library or your wish list. And this will give you everything that you need to start 2026 off feeling financially strong Now, that's it for our night. Let me so I can see if there's any comments here. And then I want to do a quick little shout out. Hi, Leah. Hey, Light After 9, winning all the awards over there. She's killing it. Hi, Hershey. Moderna Beauty, thanks for being here. This is the most engagement we've gotten from Instagram. You know, I have a lot to say about Instagram. Instagram's algorithm, I have to say, I think it's the worst one. But we love TikTok. TikTok's the best. And if you're in healthcare, LinkedIn is non-negotiable. You have to be in there. Oh, here we go. Oh, look at you guys. Oh, Dr. Farah. Okay, let's do some shout outs. Okay, real quick. Let's see who's here. So, Dr. Farah, she is the host and founder of Nurses Making Business Moves that will be in March in Tampa, Florida. Did you put the link in the chat so everyone can sign up? Are you extending the sign up for the pitch competition? So she's doing a pitch competition. You can pitch your business and first you have to buy a ticket. Then you can submit your proposal to participate in the pitch competition. If you win, you can get $5,000. One of the judges is Precious Williams. She's literally a global pitch winner. She was on Shark Tank. She's won hundreds of pitch competitions. Yeah. Did you put the link in the chat for the to register for the conference? So Farah is here, Dr. Farah Laurent. She's out there in Tampa, Florida. She is the founder of Nurses Making Business Move. This is a wonderful place to be so we can continue this conversation and find businesses we can invest in. When you invest your $5,000 in someone you've been sitting at the table with for 3 years, you understand what they're doing. You're passionate about it. You've given them ideas. They've taken those ideas. When they say, hey, look, sis, I need $5,000 to do this next thing, you're more likely to trust that and to give her your money. And in 2 years, 5 years, you'll get your money back. And you're going to help that business owner really take off and do more than they ever could, struggling alone and suffering in silence. We know that too far and too well in nursing, and that really has to end. Pitch competition, the deadline's today. You literally have right now. Now is always the best time. Speaking of now is the right time, right before this, I want to give a huge shout out to Leave No Woman, Nurse, or Midwife Behind, the Global AI Reinvention Summit. I was the keynote speaker today. One of the keynote speakers today, we were there talking to women, nurses and midwives in Africa, the UK, Australia, and globally about the power of AI, how important it is for us to be involved, not only as users, but creators, as innovators. We're already innovators. And also the power of telling our own story so that we're not written out of the future. AI is the great equalizer of our time. It doesn't matter where you grew up, where you live, who your parents are, how much money you have, what school you went to, what you know. AI sets the bar even for all of us. At any moment you want to take that leap, you can take that leap right now. AI makes it possible. Whatever dream you have, whatever dream you're thinking about, just go talk to AI about it. Say, I have this little idea or I have this big idea. Tell me how I can make this thing happen in the next 90 days. And then take action. But you know what? The best way to take action, to execute, is to be in community. And being at Nurses Making Business Moves is one community you want to be a part of. So you have to submit a 90-second video for the pitch competition midnight tonight. You cannot wait. Yes, Precious is the host. Farah is the creator. You don't want to miss this one, folks. And I always say, look, if you can't find the community you're looking for, build it yourself. That's what Farah did. This is wonderful. You know what? Let's give her flowers. 1 year ago, she wanted to go to this conference. It's really well known. And, because life is life, she wasn't able to go. And she was really disappointed because she wanted to really be in that place. But she took that disappointment and she turned it around. And she created her own conference in less than 3 months. People told her she couldn't do it. How many people have told you you couldn't do something? And then she had the first Nurses Making Money moves. After that, since then, she's had multiple masterminds. She's created a community. She's already published one book, and now she's here to do Nurses Making Business Moves. She's been a public speaker. She travels the country, and she's doing it. She's changing other people's lives because this information isn't just for you. Just like when we teach our patients, it's not just for them. It's for everyone that they can touch and talk to, because we're all advocates for somebody, just like we're advocates for our business. And yes, I have been invited to be a speaker at Nurses Making Business Moves. So thank you for that. And thank you to Heal, who also accepted my submission. And I look forward to being a speaker there in Louisville, Kentucky in September. Yeah, and so we have VIP night, which is everyone. It's going to be 4 hours. That's going to be a lot of fun, a lot of opportunities to network. I'm going to join FAR right at the beginning of the new year. We're going to have a big live show talking to you about the conference and how to set yourself up for success when it comes to networking and growing your business, taking your idea to the next level. I think that's all we have for now. Big announcements, lots of announcements today. So that was fun. Love that you're here. She's my roomie for life. So yeah, I think that's it. So I thank you everyone for being here. And remember the links in the chat to register for the money workshop for cosmetic NPs. We're doing it 3 times this week. I hope to see you there. I thank you all for watching. Yeah. Oh, and she filed for the trademark. See, you have questions about trademarks, you come in the room, people answer your questions. You don't have to wait for an email. You don't have to wait for a DM. You don't have to schedule anything in their calendar. You don't have to pay the money. You're going to pay money to be in the conference and change your life. It's not about how much the conference costs. It's about how much you're willing to invest in yourself. That's a question only you can ask. I thank you all for watching, and I'll see you next time.